The week opened on a negative note as the benchmark index shed 786 points day over day to close at 33,825 points, down by 2.3% day over day, dragging month-to-date decline to 0.6%. The benchmark index managed to remain range-bound for the most part of June, while marking the largest dip of 786 points on 15 June as sentiments were dampened owing to the recently announced federal budget. Stocks that contributed to today's bloodbath were: from the banking sector, UBL, MCB, and HBL, which declined by 3.7%, 3.4%, and 1.8% respectively. With regards to oil and gas Development Company declined by 3.1%, while Pakistan Petroleum marked a decline of 2.8% day over day. Other stocks that marked a bearish trend included Hub Power Company down 2.7% day over day, Engro Corporation down 2% day over day. Looking ahead, we do expect a bearish run in the coming trading sessions, so would recommend you sell on any signs of strength, or for those who wish to build up their portfolio, would recommend you buy on dips. For those who wish to keep increasing their exposure within the stock market but at a lower level of risk, would recommend you invest through mutual funds and bring your risk down to an acceptable level. And for those who are completely risk averse, and have some savings lying around and wish to invest, then a few of the mid-tier banks have some decent products which give you month-on-month interest on your total outstanding that keeps getting compounded every month, and you'll make some decent amount of returns by the end of the year. So yeah, keep investing in piecemeal. That's a wise thing to do. Do not go all in the current scenario. With regards to COVID-19, number of confirmed cases in Pakistan are a little south of 145,000. Cases that have gone up in the past 24 hours are north of 5,200. Total deaths reported in the past 24 hours are at 97 from yesterday's 81. Recoveries reported in the past 24 hours are at 1,986. If the current pace continues, the market does expect the cases to reach the 300,000 mark by the end of June. Premature easing of the lockdown has left a thicker mist of uncertainty than ever before. It also raises questions with regards to the latest budget, as the FBR has targeted incremental revenue collection of around 1.1 trillion to an aspirational rupees 4.9 trillion without imposing additional taxes, and based on the current COVID-19 scenario, the entire basis of the budget could be questioned. Moving on, a few of our subscribers from the Philippines requested that we do a regional market review, so let's jump in. The Philippine Stock Exchange declined by 4.8% day over day. Kuala Lumpur Composite Index down by 3%, Taiwan Stock Exchange down by 1%, the Korean Stock Price Index marked a day-on-day decline of 4.8%, Shanghai Stock Exchange down by 1.02%, Bombay Stock Exchange down by 1.6%, followed by the Indonesian Jakarta Exchange, which declined by 1.3% day over day. So it's safe to say that most of the equity markets have witnessed a downtrend across the board, while the local markets witnessed a downtrend owing to the current COVID-19 situation coupled with the recent budget announcement that has dampened investor sentiments. The regional markets largely witnessed a decline on signs of a second wave of the COVID-19 pandemic, invalidating recent optimism of an immediate and sustainable economic rebound. Once again, if you see any signs of strength and you wish to get out at a profit, make sure you start selling. If you're still looking to build up your portfolio, buy on dips. If you want exposure to the stock market at a reduced level of risk, invest through mutual funds. If you want to completely eliminate risk, go for a savings account. Look for a product that would give you monthly returns or even fortnightly returns. That way your outstanding is going to keep getting compounded, and by the end of the year you will make a healthy return. If you have any queries or questions, be sure to holler in the comment section below. If you found the information useful, be sure to share it, be sure to subscribe and hit the bell icon. I'll be back with more updates. See you all in the next one. Thank you for your time.